This is the Texas Land Guys podcast, hosted by brothers Tim Dosch and Tom Dosch. With their partners David Marshall and Trip Rich, they have built DMRE, the leading land brokerage in Texas. With decades of experience brokering deals between landowners and real estate developers, they take you inside the deals that move the market.
All right, welcome to the podcast. Tim, good to see you today.
Yeah, good to be here.
How are things in Houston?
They're good. It's getting hot, which is going to be hot now for the next 6 to 9 months. So we're starting to sweat again.
Yeah, we had some crazy storms this week, which actually cooled things down a little bit up here in Dallas, which was nice. I went for a run this morning. I love to do that before these podcasts just to kind of get some extra energy. And unfortunately, I've got a long trail run coming up in 2 weeks I'm not very ready for. So kind of wish that wasn't the case.
So your long trail run, is that like a 30 miler or 32 miler or something?
That one, this one is, so a lot of times they're just based on the trail you're on. So they're not like an exact, like a same distance every time. So this one is 2 17-mile loops. Last year I did 3 loops on it. So it's like 52 miles. This year I'm going to do 34.
Wow.
So I'm if I was doing 52 again, I'd probably back out or stop at 2 laps.
So what's your training look like? How far did you run this morning?
Not that far, because I'm within 2 weeks now. And so now I got sick a couple weeks ago. And so I'm kind of actually like rebuilding. But when you get this close to a run, you're almost in like a taper phase. And so this morning I only did like 5. I've been working out pretty hard this week. So I probably should have taken this morning off, but I didn't want to take it off just before before recording. Cause I feel like I get so much more mental clarity when I exercise in the morning. So, but yeah, it was 5 and the weather was not as humid, not as bad, but some of the runs the last couple of weeks have been kind of miserable. I mean, it was a hotter April, I feel like, than we've had, the last couple of years.
I was going to tell you, I talked to Scott Davis. We had breakfast this week and he's doing 60 marathons this year.
Wow. So Scott's at Trammell Crow.
That's right.
It's pretty amazing all that Scott's done. I'd love to have him on the podcast.
We need to talk to him. Yeah, but his 60 marathons, it includes the North Pole and all the world majors. He's doing Boston, New York. He just did London. He's doing Sydney. He's doing Tokyo. He's doing like all the big ones and all 50 states. So
yeah, it's still kind of setting in that you said 60.
Yeah, that's right.
That's more than one a week if you didn't take any weeks off. So
yeah,
he's obviously doing probably like a couple of weeks where he's maybe doing like 3.
That's right. He's doing some weeks where he does 3 back to back in different locations across the country. So yeah, it's intense. But
well, Scott, if you're listening, that's incredible.
Yeah.
So let us know if you can join the podcast to tell us about it. I know he did one in like Antarctica.
He did.
Which would be pretty cool.
Yeah, that was actually this year. He did 7 marathons, one every continent in like 5.5 days. They flew to a different continent each day, and they broke the world record for doing all continents in the shortest amount of time, which is 5.5 days. So
that's incredible.
Pretty amazing.
So it's like he does that and he develops at the same time and does a lot of deals. So it's pretty.
Yeah, he's
pretty
a great
impressive.
developer. We'll have him on for sure. He's a good friend too.
Well, today I was thinking a good topic, because we're listing a lot of properties right now. And this is something we talk about pretty often, is just why some land listings sit and others just fly off the shelf. And you see them, we call those process listings, where we'll get a listing and we'll run a very tight process on it, really akin to what you would see on more of the investment sales side, where you're selling a cash flowing asset. And so, you're basically selling on a cap rate. You don't see that a lot in land, because land is just so different. It's so nuanced, like we've talked about. But we do have these listings where they're we'll get into that. So instead of summarizing that, we'll get into why they fly off the shelf. But we've sold thousands of acres across Texas, hundreds of listings. I say hundreds. I think we'll hit 1,000 closings here pretty soon as a company. And so it'd be interesting to go back and look at how many of those are listings, but I think probably close to half of them have been listings. So it's well into the hundreds of listings. But not every listing moves fast. And we talk a lot about the timing in the market. We talk about listings that, we've been able to educate sellers to be patient, and they've rode it out with us and then had a great outcome. But you'll also see listings where sellers aren't very patient. They keep switching brokers. They're on like a 4th broker. And then some properties, I think you said this yesterday when we were just catching up. So you can't develop the whole city at once. So some sites are going to take 10 years to sell. And that's just reality if you have a certain price expectation. So today, let's break down just some of the listings that we're working on where we just get multiple offers in a week. We've had them where we're going to run a 30-day process and we pull the process after 2 weeks because we had literally 30 offers in 2 weeks. And it's like, okay, we've hit the development community here. Now let's go pick a buyer. But then others, they just kind of gather dust for months. Mm-hmm. So maybe to start, let's talk about the fun ones, the fast ones. Because I think for us, you hear the term a lot of times, deal junkies. I think we're deal junkies. I always tell sellers, they probably think that I'm making it up, but I say this all the time. I love talking about good land, like well-located land. To me, it's a game. It's a really fun game. It's something I'm passionate about, is looking at a piece of land and thinking about what's possible. That's why I got into the business, because I just felt like this is a business where I'm not selling what's already happened. I'm selling the vision. And so I love talking about a well-located tract in like an Oak Lawn or a McKinney or Frisco or just Plano, one of these areas that's in high demand. So there's some of these listings that we get that we just know from the beginning, we're going to get a ton of interest in this. We're going to get a lot of offers. This is going to be a lot of fun. So let's kind of break down that. What are some of the characteristics you think of those type of listings where we just know these are going to move fast?
We've talked about how land is the least efficient asset class. There's a lot of times where the pricing can vary widely, 20 or 30% sometimes across different sites, even in the same submarket. The ones that go fast are the ones where you're at the most efficient part of the land business. And those are deals where all the questions or uncertainties are taken off the table for the developer. So sometimes these are sites that are owned by a developer. They've done all the pre-development stuff, all the entitlements. It's a ready-to-go site. It's land, but the development community can see it as a vertical development in the near future. And the closer you are to that kind of clarity, the more efficient the market is, and the more buyers are going to come to the table and make aggressive offers. And that's where we see, hard money day one, like you're saying, more of an investment sales process where there's a lot of offers. People are putting up non-refundable earnest money quickly. Sometimes they're closing quickly. We don't really see non-refundable money on land deals very often, but these are the kind of sites where you see it, where it can be in some cases, hundreds of thousands of dollars day one, just because the site is such a good site, and there's the lack of clarity that is on the other sites, maybe in the same submarket, has been taken off the table, and developers know what they can do with their property and how quickly, and they can really start to dial in. These are the rents we're going to get. This is the sale we can get on the property. Here's how fast it's going to lease up. All those kind of questions are answered to a pretty high level. And so that's why we get so many offers so quickly.
Yeah, that's a good point. I mean, there's a lot of ways I'm thinking you can talk about this. So maybe first, adding on to what you said and just thinking about like the actual characteristics of a property. And then I think talking about how a property is marketed is really important too, because that definitely has a lot to do with how quickly something moves. But characteristics, so I think you said it, I mean, clarity and simplicity. Does it have utilities? Does it have environmental problems? What boxes can you check off? There's really important boxes to check. If those boxes can quickly be checked, this is zoned. Okay, wow, this is zoned for the highest and best use. So let's say that it's a really well-located office site. It's zoned for office. Check. Okay, it's got utilities. Check. So that's going to be critical for how quickly you're going to get developer engagement and interest. If a property is complicated, it could take a couple months just to study it. I mean, there's some large acreage properties we've worked on where you don't have good utility information. You have to actually have civil engineers go out and do studies on the sites. You can't just do that quickly. And then doing that at scale with several buyers is very difficult. So I think that's really important, is going to be, information available on the property. And then I think the story, we hear this a lot, like what's the story of this? Why is this a tract? To your point about we can't develop the whole city overnight, why is this a tract that should be developed? What's the story here? Is there like a large mixed use development coming in down the street? Is there a major company relocating nearby? Is there a shortage of supply of multifamily units in this market? Is this site underpriced because the seller just wants to sell it? And so there's a pricing story to it. Like, what's the story? I think that's what you and I love to tell as brokers, is we love to come up with what's the story. We like to say we aren't out, just making things up and kind of, just selling something that we don't believe in. We take on assignments that we feel like we can perform and excel at. We get no's from developers all the time. I mean, we'll list a property and get 30 offers, but we'll get like 300 no's. So I mean, we're getting it sold, we're getting interest, but we're also getting a lot of no's. We love to tell the story. So I think that's a big part of it too.
And it's important to just in making that statement, which is so true, is the broker actually telling the story to the right people and just telling the story, period. Because we've talked about, there's a sense where people think, my email blast is going to thousands of people or however many, buyers, and it's on all these different websites, Crexy or whatever. And nothing against those websites, but if you're not actually calling the right buyers, telling the right story, explaining it to them, knowing how to handle the pushback. Sometimes we lead with the problems with the site. Hey, we'd really like this deal. Here's the 3 problems, but here's how you can overcome them. Here's why you should do this deal. Like you said, maybe it's barriers to entry. Maybe it's, the market comps from a rent standpoint that are around you. There's some great rent comps. Maybe there's a deal that just sold that sold at a really good price. Whatever the story is, knowing how to tell that story and telling it honestly. We're not trying to hide the negative. We're just telling the whole story and being transparent. And that gives us credibility with the developers. But that part of it, unfortunately, is so often missed where, the broker has a sign up, the email blast is going out, they think they're covering the market, but what's happening is they're covering 3% of the market because no one's really seeing it. And we talk to our guys, I use the analogy of if you think of like a retail store and putting items on the shelf so the customer can see them and have a chance to buy them versus all the product being in the back of the house and no one can see it. No one's going to buy anything they can't see. If it's not getting in front of the potential customer where they can see it and make a decision to buy or not buy it, it's not really being marketed. And we see that all the time where this market's flooded with sites, flooded with opportunities, and the brokers are not actually telling a compelling story of why the developer should pay attention to this particular site.
Well, and I was thinking about this, the other day, because we're always trying to get better at what we do. And I was thinking about, when we market these properties, like we just finished marketing of some properties here in Houston and Dallas where we got a lot of offers. It was a very fast marketing process. And the feedback from a lot of the buyers has been, wow, I can't believe you guys got that many offers, that you hit that type of pricing. You're kind of blown away by the terms we got. And I was just thinking like, what did we do that maybe, someone else wouldn't have done? And what made our marketing of this more unique? And something that came to mind that I think is really different about the way we do the business is we do go directly to the developers, which yes, other brokers do that. But we do it after having worked with a lot of these developers on the buy side, like for years, and meeting with developers constantly, not just talking about our listings, talking about their business plans, talking about where they want to go do projects, what type of projects they want to do, following developers from company to company as they move around. I mean, this is like tens of thousands of hours of relationship building, so that then when you call that developer about that listing, it's not like, I don't know who Tom is. Like, who's Tom? And there's some random site. It's like, hey, this is the site. This is the story. We can tell the story of the site. We can tell the story of the site to the developer, knowing what they're looking for. Like, we know what that developer is trying to accomplish because we know that developer, we have a relationship. And so that's just another level. I think that's very granular. It goes a lot deeper. But the way that we market these sites, like you're saying, you're putting the product on the shelf, but then you're actually able to understand, like, the person walks by, are they too young to buy that product? Does that not fit what they're trying to do? Is that product meant for someone younger? I mean, whatever that is, that's probably a bad analogy, but like we know enough about these developers to know that like we will hound them if we think this is a good fit for them because we have all that history with them. And then they will pick up and answer the call because they're like, if Tim's calling me about this is a deal that I need to focus on. And so getting that kind of engagement that quickly is actually really difficult because people are busy. They're like very busy and there's a lot of sites. And so I think having the relationships on the front end which takes a lot of work. So if you're a broker and you're doing that, it's like just stick in there. It takes a lot of time to build those relationships. And ultimately you have to put the client first and serve the client. You have to be willing to provide values. I mean, we provide value through land comps. We provide value through meeting and talking about the market and giving market updates. I mean, I've met with clients for, I know you're the same, Tim, for 10 years, like every quarter, and never done a deal with them. And just tried to help them, just tried to be a resource, tell them what's going on in the market, what's trading, what we're seeing. We still talk about deals all the time, but, a lot of times that, their company's not active or they're just not making offers. And so I think that's a big aspect of it too. It's just like understanding what these developers are actually trying to do is really unique about the way that we're approaching these sites. But then that allows you to very quickly generate serious interest because you just know what developers are looking for.
Yeah, that's a great point. I think, just to take the multifamily business, since we have so much history there, I know when you get a site in Dallas, it's a multifamily deal, even though theoretically there's maybe 50 or 60 groups who could do it, in your mind, it's between maybe 3 to 5 groups. Maybe there's some where there's more groups who would do the deal and be competitive. But a lot of times there might be a lot of offers and there might be a lot of interest, but we know there's a couple of groups, like this is their deal, or it's one of 3 or 4 groups deals, just because of the kind of deals that they're going to pursue, maybe the way they're capitalized, or maybe just where they are right now in the cycle. They don't have a site yet. They need a site really bad. They're going to stretch for a deal. There's certain developers who are going to reach, and they're going to reach an extra 10% or 15% that their competitors may not reach. Those kind of nuances are really important when you're going to market these sites, and it really can make the difference, between how successful the sale of the property is, or how maybe not successful it is. But it only, at the end of the day, it only takes one buyer. So you can go get a ton of offers, but you got to get one group who can have low transaction risk, get really aggressive, and just stretch as much as it can on the property.
Well, so before we leave kind of this segment on land listings that move quick, it's probably important to talk about pricing, because I think pricing is definitely a huge aspect of that. And I think we like to market our properties in a unique way. And I say unique, there's definitely a lot of other brokers doing this, but I don't know the last time, and it may be a little different in Houston, but I don't know the last time we put like a list price on a flyer on a property. And it's really common. We'll meet with the landowner and they'll say like, I want to sell my property for 10 million, and they'll want, what are you going to price my property at? Why don't you just walk through like why we don't normally post a price, and why, and our thought process as to why it's going to be better for the listing process, it's going to generate more interest, and it's going to be better for the landowner at the end of the day to not post a price, but kind of have a whisper guidance price.
Yeah, we've probably gone the last maybe 15 years or maybe even longer without having list prices. And there are exceptions. Sometimes a seller, they just have to have a list price, or, maybe in a situation where that it's a fast sale and they just need to sell it quick. Maybe we'll use a list price just to let the market know, like, hey, focus on this. This is a good deal. They're just trying to sell it quick. But for the most part, I mean, one of the biggest reasons is if you go put a price on a flyer and just blast it to the market, and the taxing authority happens to get that, as a seller, you're in a really weak place to try to argue, to go fight your taxes on if the property doesn't sell, because you went out there and put a list price on the property. So that's one reason. But, the other reason is you don't want to put a cap on pricing. I mean, there's been so many times we go to market the property, and especially in a more competitive environment, we'll get 20% or 30% higher than we thought we would get, just because if you hit the market at the right time and you get the right buyers looking at it, the market can get really efficient. They can get really competitive with each other, and they can really stretch on pricing. So there's really no reason to put a cap on the pricing by having a list price. We will use a whisper price or guidance, or, we'll figure out a way to kind of give people some idea so we don't just waste everyone's time. But we never use an actual list price.
Yeah. And I would say that's right on. And then the only thing I would add is, by not putting a list price, it forces engagement. So every potential buyer wants to know what's the price. So you can blast a site out and get a lot of responses of engagement. And then also for us, we can talk to a lot more buyers, and they can be open to, working on it, versus if we just said 10 million. And you know how this works out. A lot of times If we would have said 10 million and they can pay 8, they wouldn't look at it. But we've had plenty of deals where that same buyer offers 8, and at the end of the day, they pay 10 million and they close. Because by getting them engaged and working on it and having the opportunity for us to sell them on it, a lot of times we can get them up to that price. So yeah, I think that's a big one. I mean, ultimately, we're not going to sell any property if an owner is just way out of market. And so the other thing that not having a price does is it helps us firm up, like, what's the actual market price? When we've talked to hundreds of developers about it, a lot of times you'll have these bottom feeders that are lower. Then you'll have kind of another section. So maybe you got a bunch of offers at, 8 million. Then you have some offers at 10. And then you actually have like 1 or 2 buyers at 12. Well, it ends up the market was probably more like 10. We actually got 12 for it. But that process of talking to the entire active market to get to that point, that's really the best process for a seller to know that they're really getting the best deal.
Yeah, you want the market to set the price. And we say it all the time with sellers, because sellers they'll have some arbitrary number. And it's like, well, can you get this for my property? And it's like, I'm not actually getting you anything for your property. The market will determine the price if the property is exposed the right way to the right buyers. And that's what you want. I mean, you can't force the market to do something the market's not going to do, because it just isn't there. But what you want is to make sure you're not underselling the property because the market hasn't seen it. Or maybe just a couple buyers have seen it, and so you're getting some of those lower offers, but you're not getting exposed to the higher offers. So whenever possible, and sometimes it's not possible. I mean, I think it's good to talk about, there's different kinds of sites. There are sites that are just really tough. If you have a site that has environmental problems, or it has no utilities, or it has floodplain issues, or it's in just a part of town that's not a good part of town where there's not a lot of activity. If you look at all the major Texas MSAs, they're just these massive cities. There are submarkets in those cities that are dead, where there just aren't a lot of transactions. It doesn't mean the property won't sell, but it could take years to sell. And there just may be no way around that because there's not a very active market. There's other parts of town where there's just a lot of demand. There's a lot of focus from developers, and they want to go do deals there. And so I think understanding that as a seller, kind of where your property lines up, and also as a broker, just how do you strategize around, what you're given with the property.
Well, that's a good transition into some of these listings that stall out. And we've had listings. There's probably 2 ways to talk about this. There's listings that are just mismarketed a lot of times, and so maybe it was a good site, and it's still out there. And we've said this before to many landowners. What you don't want to do is go out like way too high on price in the market, or go pick the wrong buyer. There's a lot of deals where the wrong buyer gets selected, and I would say wrong buyer is someone that's going to drop the site. So they put it under contract. It doesn't matter if it's $1,000 a foot. It doesn't really matter if they're going to drop it. So they drop it, and then you see it coming back to market. There's times when that's not going to hurt you as bad, and then there's times when that can really hurt you, because then also if it happens again, then there almost becomes this stigma in the market. Like, what's wrong with that site? Why does that site keep getting dropped? Especially if it maybe started as a really well-located site, and it's like, wow, now the market kind of backs up, or they think, I need to get a better deal on that because other people are dropping it. Why would I pay more, or why would I pay the same price? And so there's mismarketed sites. And then there's also just the reality, and you were just kind of saying this, and there doesn't have to be anything physically wrong with the site. It could just be, the seller wants $5 million, and it's not quite a $5 million site yet. And so there's a lot of listings that we'll work on where we'll give our value on the property, and we'll tell the seller, we'll work on this, and we know we can sell this, but you need to be patient, because there's not going to just be a lot of buyers immediately for this site. So there's also that reality. Those, maybe they do have something, physically wrong, environmental, utilities, floodplain, or maybe it's just located in an area where there's other things that need to happen, kind of before this site's going to be ready, or it's just priced a little higher. But I mean, we've had sites that we've listed for years and, stayed in contact with the owners, kept them updated, continued to work on them, continued to talk to buyers, but it just wasn't the time yet to get to a price that made sense. And so, through marketing these sites, eventually there will be a closing, but not every site is going to just receive 30 offers, go through a best and final process, and, result in a quick closing.
Yeah, I think your point too about just transaction risk is so critical. I think if you look at the sophisticated sellers and unsophisticated sellers, one of the biggest differences is an unsophisticated seller gets very focused on the number on the LOI or the number on the contract, and they get all excited about, man, they offered me this much a foot. And it's like, when you've been around for a long time and you've seen thousands of offers and you've seen lots of deals fall out, we know that there's not a lot of value in the LOI, or it's only as strong as the group behind it. And the sophisticated sellers are like, you know what? I want to see, like, is there really a case where they can get this done, or a good chance? Is there low transaction risk? And there's a lot of ways to look at that. A lot of it is, what's their track record? Are they dropping deals? Or certain buyers who drop deals, they go type a lot of deals and they drop them. There's other developers that have a really good history of closing sites and getting deals capitalized and maybe working through development challenges on a site. But I think that's just so critical, because one of the worst things that can happen as a seller is to be dropped, one time, or in some cases multiple times. And in Houston, it's been a real issue, because we have so many cycles here, that the cycles, at least in my time in the business, have been every couple of years there's a down cycle. So if you miss the hot time in the market and you get some great offer that you go under contract for 6 months or 9 months and it doesn't close and the market changes, you may be sitting around that property for another couple of years before you get another similar priced offer. And so then it's critical. You got to find someone who can actually close. And sometimes it's not the highest price. Sometimes it's the price. It's 5% lower or 3% lower. It's close, but it's just a group that's very well qualified and they're going to get it done. And I think for sure with us, when we look at selling property, we really are considering the strength of the buyer and their ability to close more than the price of the deal.
Well, and you'll definitely see listings stall out because of the seller's expectations on, like, developer pricing versus investor pricing. So there's so many sites I could point to where the price is not really off. It's like the market price, but it's like, I need someone to close in 90 days. And, you need to maybe like form a mud on the site, or you need to, you have to zone the site, and so it's like, well, your pricing is probably pretty close to market if you gave the time for a developer to execute. And so we see that a lot. And I don't know if that's, again, it's kind of like being a little bit more unsophisticated, because what you're pointing to is you'll also hear, like, I won't tie my property up. Well, you have to tie your property up. It's just, you need to pick the right buyer. Knowing that, it's like a Trammell Crow or an Alliance or somebody that closes on a lot of deals, and knowing that, like, you're going to have to tie it up. They need maybe on a specific deal 9 months to execute. So you can't make them do it in 90 days.
Yeah.
Because there's a huge difference in value if you're gonna make them do it in 90 days. And so that's always a big part of the conversation when we're talking to a landowner and they say, okay, well, I want you to value my property. If they also say, I need to close, by such and such a date, that's going to factor into what we are going to then value the property for.
Yeah, maybe
because it has a bearing.
To add the reason why is, like we've talked about in the past, they're not just going and paying cash for the property. They're going to go capitalize a development deal on the site. They're going to do full architectural plans. They're going to work through all the site due diligence, environmental survey, entitlements, all that stuff. And so when you make someone close in 90 days, they haven't been able to finish all those things, which creates some uncertainty, or at least, it creates a lot of carry costs on the site, and that affects the value of the property. So that's a big issue where you'll see sites not sell. Maybe someone markets a site for 6 months or 9 months, and because they will not give someone time, or they want like hard money day one, or some of these kind of non-market, things that they'll want for their property. And then they're like, well, man, why won't someone pay the price? Or why can't I get anyone to buy it? It's like, well, because you're asking for non-market terms. And that's a real big hurdle for buyers to buy your site at the price you want.
Yeah, probably the last thing I'll say on this segment, like why some listings stall, is at the end of the day, the most important thing is being able to get a listing in front of the right developers or right buyers. And it's like a funnel. The more challenging the land site, the less demand for whatever that highest and best use is. It could be, I gave an example earlier of office. I mean, there's not a lot of areas where office works. So if it's an office site, there might just not be a lot of demand in that specific market for office, which means, like, if you're looking at a funnel, the potential buyers are so few. There might not even really be a buyer. It might be more of you have to then switch to more of an investor type buyer for that property, not a developer. And so being able to get to the right buyer is so critical, but that number of buyers is really going to skinny down depending on the actual physical property. And so the fewer buyers you have, the more patient you need to be. Because yes, maybe it's a zone multifamily site, but if it's in a challenging area, instead of there being like 300 developers we could talk to, there might only be like 20 that actually would go that far out, or build that small of a project, or build a high rise today, whatever that is, where it just suddenly becomes a lot smaller group. And it could be that, those 20 developers are just out for some reason because of the market. And so you're just going to have to be patient until things come back, or you have to, lower the price and it becomes more of an investor deal at that point.
Yeah, that's right.
So next, let's talk about just maybe some deals we've worked on where contrasting some deals we've worked on where they went really quickly. And then maybe when we worked on a deal and then it just, it took longer, and then we had to make some kind of an adjustment, or there was a market adjustment to get it closed.
Yeah, I'd say the two biggest factors that affect how fast and how efficient the market is number one, where you are in the cycle. We can't overstate that enough. I mean, there's been times where we've had just these amazing sales, and it's always when the market is really strong and there's more developers. Maybe there's still a couple that are really going to be the aggressive ones, but there's a lot more developers looking at sites. There's the capital is a lot easier to get. So it's a combination of a very clear offering with a really good story. So maybe it's high barriers to entry, it's good rent comps, it's no issues at all with the property, no uncertainty with the property, and the combination of just a really strong market. And in those cases, we've seen some really crazy terms and some really crazy pricing. You see high watermarks on pricing. Pricing can move in the hot markets, maybe 20 or 30% higher than it's ever been before. And you'll see things like hundreds of thousands of dollars hard day one, or really tight time frames on contracts. People will go buy sites and they will pay carry costs while they do their architectural work and while they do some pre-development on the site. There's just a lot of flexibility. So that's one thing. When it goes the opposite way and you have sites that sit on the market, one of the biggest things is again probably a down cycle, but also a seller who just is mispricing the property. And we see it all the time that people have this price in their mind, whether it's a comp that was in the submarket from years past, or they hear something about the market. It's supposed to be a really good market. So they will just set a price in their mind that is higher than the market. Maybe it's only 10 or 15% higher. In some cases, a lot of times it's 30 or 40% higher, and no one can get there. And they'll get multiple offers from very credible buyers, that are kind of underneath their expectations. They turn them down and they think it's all the buyer's fault, and we've had this. There's a deal we've worked on recently where the submarket changed. So there were much higher sales in the submarket in the past here in Houston. And unfortunately, the market's just gone a different direction. No one wants that submarket anymore. There's no developer interest at all. There's some investor interest, but it's limited because investors are always looking for, if I'm going to invest in this property, will there be developers and higher paying end users that want these sites in the near future, the next couple of years? When you can't see that, then the property value falls. And so on this deal, that's what's happened. And so, the offers have actually been coming down over the time we've listed it, because initially people made aggressive offers. Those got turned down. The property got a little bit of a stigma of, hey, this group's not being flexible. It's not worth spending time on it. So then we kept getting offers, but they're lower offers. And actually that market's continued to deteriorate because of other sites that have sold in the market at cheaper prices. So you have these lower comps that are being set in that market. So it's unfortunately just kind of a downward spiral. So I think when you know that the property's been shown to the market and the right buyers have seen it and the market is responding and giving you a price, you need to really challenge yourself as an owner. Am I actually being realistic with my pricing? Is there some ego involved of, I think this is worth more just because I think it's worth more? Or is the market trying to tell me something and I won't listen to it? And, if you can hold the property for 5 years, then maybe that's fine. I mean, there's not times we say, hey, don't sell right now. Just wait. It's going to come back. But if you need to sell, you need to listen to where the market is and make a decision based on what the market's giving you.
Yeah, that's good. I was thinking as you were talking, up here in Dallas, I can think of 5 deals we've listed recently, all in different submarkets of Dallas where, and it's funny because as I'm thinking about them, they're all a little different. Like one of them was in the ETJ. One of them was not zoned yet. Another one, or let's see, 2 of them were zoned. And then the fifth one, I think, also was zoned. So you have some zoned, some not zoned. We knew in all cases, like well located, we knew that there was a lot of demand. These were all actually apartment sites. So we knew there was a lot of demand in these areas for apartments. A little bit different timing in the market. So this was over the course of like 18 months. And so you have, kind of ups and downs in the market during that time. But they were all in submarkets where maybe there was like lower supply or was just considered a really good location. And what was unique about all 5 owners, and they're all different. So this is homestead owners. This is like institutional owners out of New York. This is private owners out of California. This is just an investment property. I mean, it's all over the board. But what was the same about all of them was they trusted us to go run our process of, we've sold more multifamily land than anyone else in the state of Texas. So let us go run this process where we're going to go out to all the most active developers in a very tight time frame. And so these range from 2 weeks to 30 days. 2 of the 5, it was less than 30 days to get 20 plus offers on these properties. And what was common about all these sellers was they were willing to allow the market to establish the price. And all of them, at the end of the day, were pleased with the fact that we got terms better than they thought they would get. Like we achieved above, we'll do value ranges when we do broker opinion and values. And we achieved above our value ranges on all 5 by just running our process. It's so powerful to create a sense of urgency by going directly to the development community, getting several offers, getting everyone to work on it. And I always tell landowners, our developer clients know when DMRE gets the listing and takes it out, we're going to sell. And there's a huge difference between like, I'm calling you off market, you're thinking about selling. And as a developer, you can waste so much time talking to a seller off market. We've had so many sellers that just decide at the end of the day, like, I decided not to sell. I've had sellers do that, right at signing the contract, I'm not going to sell. Well, when we're listing a property, they've signed our listing agreement. They've committed to going to market. They are going to sell. And so the developers, that creates a sense of urgency. There's a call for offer date. It creates this competition. But in all these cases, and I think it is the most important thing, we create the story as the broker. We come up with how we're going to sell it. If the landowner is willing to work in partnership with us and understand that we're going to go and execute really well for them, and we're going to represent them well, we're going to come back and say, here's the offers. Here's kind of what we think are the stronger offers. Here's why, but you make the decision. All 5 of these worked out really well because of that partnership with the landowners. Now, how they said, I just need some price, like you said, all 5 of those could have missed out on a sale. Yeah. And now looking back, those were all like high watermark sales, but they all could have missed out on a sale by just saying, I got to get a price, that's 20% higher. That's just not there because you can't push it more than it. We normally find the upper end, if not beyond, of where a site can really be priced, because we'll push developers really hard within reason. And a lot of times it isn't the highest offer, like you said, that gets selected. It's what has the highest likelihood of closing.
Yeah, that's right. And looking at everything, looking at hard earnest money, looking at how quick the time frame is, how's their capital structured, who are their partners. I mean, there are certain groups who have capital. There's groups who have family office money or have, private capital. And there's groups who just have incredible institutional relationships where they are able time and time again to bring institutional equity to the table to do these deals. And maybe their competitors don't have those same relationships, don't have that same success rate with that institutional capital.
And then on the other side, deals where they've taken longer to sell. So, we've talked about this. We've had listings. I worked on one in Houston when I was down there that I think it was 8 years from when we signed the listing to when we sold it. And it was an island. It was, actually an island, which, a lot of people are like, I didn't know there were islands in Houston, but it was an island. It had been an island that had been purchased by like a real large institutional developer that had basically lost it back in the GFC time. And so then we picked up the listing. And that one was really a function of, it was actually in a market with some zoning. So it was really difficult on the zoning side for a long time. What it was zoned for was just out of reach of what made sense. The landowner was a great landowner and they wanted to sell, but the zoning was challenging. And then Houston kept going through these like 18-month cycles.
Yeah.
So it was like we would get interest, we would get a good buyer on it, and then we'd hit a oil downturn, and then that buyer would fall out. And so that one was really susceptible to just, it was a really unique property, but it was the market and then it was the zoning. And then we did eventually get it sold. The landowner hung in there with us. We worked it really hard. It was a site that we had to work really hard because talk about having kind of a stigma. It was like everybody knew about the island. Everybody had looked at the island and it was like, well, why isn't it sold? And it was nothing to do with it being a bad property. It was actually a really cool property. It was really just the fact that, you know, the market kept going up and down. And we finally got to a point where we were able to work with the city on the right type of zoning. And so the zoning adjustment, timing in the market, and it got done.
Yeah, I think on some of those sites, we've had quite a few of them over the years. There's going to be the sites where you have a lot of interest because they're just down the middle of the fairway. You know, like in Houston, it's a Katy suburban site or it's a Heights wrap site. Everybody gets it. Everybody wants it. It's pretty simple. And then you have these sites like this island deal you're talking about, or it's a submarket that no one really wants, you know, where it's kind of a little further out and growth is getting that way, but it hasn't gotten there yet. I think as a broker, really understanding that story, why it's still a valid site to show to people and look at, and then just knowing who to really push on it. Because there's some developers that they're just never going to do that deal. You know, I mean, every developer, you know, you could almost look at them as like people. They have certain personalities. They have certain things that they're interested in. They have the deals they're really good at where they can really pay a lot for them. And then they have deals that's just not their deal. And so knowing who to show it to, and then knowing sometimes it's a little bit of a marathon. It's going to take time. It's going to take a lot of work, you know, pushing different groups on it, you know, working on offers. We've had deals where, you know, for years, no one to offer on, and then suddenly we finally get someone to offer on and they go build the deal and they're successful, you know, and the story proves out. So, you know, some of those deals, they're just challenging deals because of that, the submarket they're in.
Let's do maybe some like tactical takeaways as we wrap this up. So if you're a landowner, what are some things you would suggest a landowner should do before, you know, kind of, I guess, to prepare to take their property to market? Things that we like to, you know, tell landowners to do. I know that that's a broad question, but what are some things that come to mind?
I think the first question to ask is, and this kind of goes back to motivation for selling. I mean, maybe you're just saying, hey, I need to sell right now because I need to liquidate this and go use the cash for something else. Maybe it's just time. But the first question would be, is this the right time to sell the property? And we tell people all the time, you know, when it's not the right time, like if the market's not efficient, maybe it's a great site, like in today's market, an infill site, great location, you know, and it's like, man, the market's just not going to be able to respond very well to this today because of where the capital markets are, because of higher interest rates. So the first question is it the right time to sell? Can the market really get aggressive on my property or not? And what are realistic expectations based on the market? Are we seeing really fast contracts? Are we seeing pricing in whatever range I think I want? So I think that's the first one. And then I think just trying to get to a realistic expectation of value and then being willing to trust the process of actually going to market with a broker who's going to show it to everybody, who's not going to rely on a sign or on email blasts or on their platform, you know, like, oh, our company has this great platform and we're in all these different markets and we're a global company and everybody sees it. The reality is they're not really getting in front of the quality groups just by that. It's, are they going to go meet people face to face, get on the phone, work the deal, really push it? If they're willing to do that, let the market really set the price. Just go get offers and be willing to listen to the market. You know, maybe the market's going to tell you, hey, this isn't a retail site. Here's why. This is not this kind of multifamily site. I think it's a structured parking deal. It's not a structured parking deal. It's a high density surface park deal. Here's why. You know, just, you know, be willing to listen to what the market gives you and make a decision based on that. And then hopefully get multiple offers from, in some cases, like in Houston, we can get, you know, multiple different types of users. In Dallas, maybe it's because of the zoning, it's going to be a little bit more of a narrow focus, but really let the market speak from the different developers who are able to develop on the site and different uses that would work on the site and see where those things come in to make a decision.
And just like really practical things that come to mind, you know, like get a survey.
Yeah.
I mean, if you don't have any survey, if it's an old survey, that's helpful. Like if you've owned a property a long time and there's not going to be a lot of new easements or something, but a survey is so valuable for a developer, because it's hard a lot of times for developers to really analyze properties without a survey, or at least get to where, if you're really trying to get to a strong, you know, price, like get a title commitment on a property. I think that can be really helpful for similar reasons. We, a lot of times, will help connect landowners with attorneys. I think having like a good real estate attorney at the beginning can help a lot and can save a lot of time. And so just like really simple things like that. basically just kind of get the team together so that you're ready when when we go to market. A lot of times it just surprises people, especially on those listings that go fast. It's like we'll go to market and then we'll get so many offers. And if we're selling, maybe your homestead and you don't have an attorney and you don't and you don't have a survey, it can really kind of bog things down and slow things down. So and then I guess from the broker side, what do you think is important, like real simply on like pricing and packaging? Like what's important on these deals to just, whether or not people are reading flyers or not is probably its own discussion, but I mean, they're still an important part of what we do. So what would you suggest on that side of things?
Yeah, on the flyer side, just having a professional flyer. I think it's cool to have a really cool flyer. A lot of times we'll fly aerials and you put a lot of time and thought into it. I think a lot of times those aren't really getting looked at or read as much as you would hope, especially by these developers. They're seeing a lot of deals and a lot of flyers, but you want to be professional and you want it to be impressive. And a lot of times it's the imagery and the aerials that do that. And even telling the story through the aerial, like what are you highlighting? What are you marking up? Where are you like pointing the viewer to? How are you kind of telling that story through the flyer? I think for a broker, the big point is who's the buyer for the property? What type of use is it? What's the highest and best use? Who's going to get aggressive? I think if you really understand, let's just call it a multifamily use type, if you understand who those buyers are, we know immediately when we see a site who we're going to call. And they may or may not be the buyer, but we know who's likely to make offers, who can get aggressive on it. We're going to try and hit everybody because you never know. Maybe there's someone that surprises you. In a hot market, there's groups who come in from out of town and will pay up for sites to get a deal. But really having a feel for, okay, who do I need to go to on this? Who do I need to push? And then there are certain groups that, like you've said a couple of times in this podcast, we're not going to just back off because they say no. Because we know that like we have some conviction, like this is your deal. Like you need to do this deal. And so we'll push them pretty hard. And we have that relationship where we can kind of go back and forth and, respectfully, kind of disagree and talk about, hey, have you thought about this, this aspect of it or that aspect of it? And really pushing those groups on it.
Yeah, no, that's good. I was thinking, the pricing component of a broker working with the landowner. I think, like you said, motivation is really important. I think, unfortunately, sometimes like pricing, it can actually do a lot of damage. A broker can do a lot of damage.
Yeah.
Like I'm thinking about some situations like with churches where like a church needs to sell and they meet with the broker and the broker gives them a really inflated price. And then like that church decides like they're going to go make decisions off that. Like that can do damage. Similar, I was talking to a broker the other day about a deal that's an auction and like the price that, and I don't know if it came from this broker, if it's just the landowner, but the price they want for this property at auction is like the price, if you ran an entire process and gave someone a year to close into construction. And those two things just don't really go together. So, pricing can do damage and it can hurt the property too at the end of the day where it goes through this auction or, this church is trying to sell and they get in a bind. And so I do think understanding the seller's motivation, like if it's an investor and they're trying to hold out for the highest price, then it's less important to go to market at a higher price if they're patient. But if it's somebody that needs to sell, you can do a lot of damage by going out too high. And one way to protect against that, something we like to do, we normally have a really good sense of pricing because we're making so many offers across the market. But if it's a really micro market where we just don't have as much data, a lot of times we'll go talk to some developers that we know are really active, that have really good numbers, just data on the market and be like, maybe they've done something here, maybe they haven't. How would they look at this property? And we'll get kind of an idea before going to the owner and saying, this is what we think it's worth. Because we want to have something that's more than just like our guess or our opinion. We want to have data backing up the pricing we're coming up with. So just want to say as a warning, like you can do a lot of damage by going out too high. Obviously, if you go out too low, you'll probably get a lot of offers. And it's probably better to go out low and be a little bit patient and then see the price come up than go out high and never sell.
Well, I think the most dangerous thing, and it's like painful to see this. We see this all the time. It can happen to a broker, or it can happen to an owner, is when you take a comp out of context in the market. So for example, like in the Heights area here in Houston, we've seen sites where there's a site that sells because it's a smaller, efficient site. on a major street where you can do a wrap deal. And so the market's more efficient. Someone pays a high dollar per square foot for that site. So then there's a guy who's not on a major street frontage. His site's twice the size, which is a big deal. So it's more of a surface park size site or multiple wrap site, but it's too narrow to build a wrap deal on it. And I know this is getting a little bit in the weeds with our business, but what will happen is a broker will go to that seller and say, hey, look at all these comps. This deal sold for 80 a foot. This deal sold for 100. And you're not comparing apples to apples. And a lot of times it's inexperienced brokers, or it's a broker who just wants to get the listing. And then the seller doesn't understand. They're like, hey, you're right. I mean, this was sold a couple hundred yards away. So my property should be worth at least that. And not understand the development, the way deals get developed and the different types of uses and the way they're configured, the optimal sizes, for those kind of developments. There's so many nuances to our business. And it makes me sad sometimes because we'll see these deals go to market at these like crazy prices. The broker doesn't help them. They don't get a sale. It's not good they don't make any money. It's not good for the reputation. The seller's frustrated because they're saying, hey, like, why is the market not responding? Why am I not? They start blaming all the developers. You're lowballing me. And so this is a negative cycle that happens. And, we've seen that so many times, and especially with these churches. I feel bad for churches because they'll get a broker that will go to them, and a lot of times they're not a qualified broker, and they'll be using some sort of market data or comp, but it doesn't apply to that church or to the way the church's site is set up or configured. Maybe it's too large of a site for that comp. And so they'll hang their hat on this value that's not a real value, and that the property doesn't sell, or it takes years to sell and then it sells at a lower price.
Yeah. So, I mean, if you're a landowner and you've got a listing that's just been sitting out there, I mean, definitely think about pricing, think about where you have it priced, think about your motivation. Land deals they do just generally take time to sell. I mean, it's rare that deals are just, start to finish 90 days on the land front. So it's, got to be patient to some degree regardless, but think about where you're priced. And then I think what we're also saying, probably the second most important thing is know who the buyer is. To know maybe first of all, who's the use, the type of developer, and then all the way down to like, who's the actual developer that has capital. And I know we've done an episode on that really got into the weeds of that. But, if you're a landowner and you want to talk to us about your property, see if we have any different perspective on how we would look at it, give us a call. If you think you have a property that's really well located, that would benefit from going through a process like we're talking about. We've run a lot of these processes for even developers recently. Where we're taking a developer site out, which a lot of times those are the ones that really get a lot of interest. And I always tell people it's better for us to represent you than for you to try to do it yourself. It's good to have that arm's length. Plus, this is what we do. This is what we do every day. We wake up ready to work on these kind of deals. We have processes, we have teams, but it's also better, not to be, trying to sell your own property, but allow us to do that because we can maximize the terms and price and just have so much history on these buyers. So a little plug there for reaching out if you've got land that you want us to value.
And we can, most of the time, very quickly, I know, Tom, I'm sure for you, and I'm the same way here in Houston, like within like 30 seconds, I know, is this a deal that's going to sell fast? Is it not going to sell fast? Why would people not respond and make offers right away? Where are like the big hurdles? And is it being mismarketed? I mean, I think that's very apparent. Sometimes it's being mismarketed. Sometimes it's the pricing. Sometimes it's the submarket. But we can figure that out very quickly. And we're always honest with people. I mean, there's times where we're like, hey, you need to go sell this now. And here's the marching orders to go make a sale. And sometimes it's like, you know what? I would sit and wait on that. Don't go to market. You need to wait for a different time in the market, where things are more optimal.
That's good. Well, that was good. Thanks, Tim.
Yeah, thanks, Tom. That was fun. That was a good one.
Yeah. All right. Well, until next time.
Sounds good.
Thanks, Tim.
Thank you for listening to our podcast today. If you have questions about land you own in Texas, send us an email at texaslandguys@dmre.com and follow us on LinkedIn to stay updated.